Good day, ladies and gentlemen, and welcome to the show on this Thursday, the 13th of December, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, I'm going to tell you guys what. I'm going to talk about inflation. We got the CPI numbers in today, and we've seen a little drop in inflation, but we're going to take a look at the overall chart. Now, here's the thing, guys. What we're looking at is just like we had that surge up created by all that excess printing of excess liquidity into the system and the huge liquidity injections after COVID, now what we have is a tightening on the other side of this. And so what we're actually seeing is, we're actually seeing an effect that's just beginning that's going to increase in its velocity over the next number of months, as the Fed continues to withdraw $95 billion a month out of the system and keep hiking interest rates to a certain degree. And this is going to have a tremendous cooling effect on the economy. So we're going to get in there. We're going to take a look at this. Let's open up the charts right here. This is the latest CPI numbers. And what we're seeing here is, going back, see this at the very start of the chart, that's the dip created by the 2008 crisis, the great financial crisis. And we dipped down, you see, below, and we actually had deflation. And then again, around 2014, 2015, we were riding the line. Almost no inflation whatsoever. And again, we were riding the line almost around 2019, 2020, almost, right? And then we seen this huge increase in inflation. It's like climbing a mountain, went way up over 8%, and that's the CPI numbers, because really it probably went up to 15, 16, 17%. Now we see a cooling off. It's down to 7.1%, according to their metrics, which is probably around 13, 14% right now. But it's dropping extremely fast, and this is going to continue. This is set in motion now at this point. It would not be surprised to me at all if we see a setup right now that's extraordinarily like what happened in 2008. The setup is there for it right now. They've set it in motion, and they're going to continue, and they're not going to stop. And it's just taken a little bit longer than I thought. It's exactly what I predicted would happen, way out there, except I thought it was going to happen in 2022. Well, it looks like it's going to happen in 2023. So I was a little bit off, but predicting the markets, that timing is an awful hard thing to get right. And that's one of the things I've had a hard time with over the years. But my predictions generally come true. It's just the timing. So we're a little bit late on this, but that doesn't mean it's not going to happen. It is happening right now. So there we go on the consumer inflation. Let's take a look. There's some other things I wanted to point out this morning. Do you remember last week I was talking about how they were resurrecting these viruses from the permafrost, or like 50,000-year-old viruses and stuff? Spotted this article in here this morning about ancient pathogen is an imminent threat to every part of the world. The World Health Organization is warning. So, I don't think they're actually talking about that virus that they dug up from the permafrost. But it could very well be that one of these viruses they're digging up from the permafrost could get loose. Something that hasn't seen the world for 40,000 years. Or 100,000 years even. And an unknown virus with unknown side effects and unknown everything. Is that what they really want? Why not leave those viruses alone? Leave them in the permafrost. And especially bad is they're taking these viruses now and they're changing them. I guess they think that they're omnipotent and viruses can never ever escape a laboratory. Tiny little pathogens, so small that they can make their way through tiny little holes in the wall. Once they're out, once they escape, it's too late. That's the thing. What else we got to point out here? I was looking at articles. Okay. I guess those are just... oh, Somalia right now. See, remember how these food distribution warehouses were burning down and farmers couldn't get their fertilizer, and a lot of farmers are being hit with different... and then we had the war in Russia, stopped all the grain from coming out of Ukraine, a lot of it anyway. It's starting to hit home now. Somalia is battling hunger as it braces for famine during a prolonged drought. So this is not good, to see people starving in the world. And we got 8 billion people. Can't we feed 8 billion people? Question mark. Anyway, take a look at this price of silver today. We saw a bounce. It made it up over $24. But right now we're up 61 cents on the day so far at $23.89. Now let's take a look at gold. So why are these things catching a bid? Gold's up to $18.17, up $35 on the day so far. Why are they catching a bid? Because investors now can see the light at the end of the tunnel. They see we're headed toward deflation. They see that the conditions are tightening up, and they realize that soon the Fed is going to have to loosen up very soon. They see the light at the end of the tunnel of this tightening program. And so that's why we're seeing effects like this. Gold and silver. Crypto's catching a bid too. 17,848 for Bitcoin. We might have seen the bottoms. 1334 for Ethereum. So I know there's an awful lot of news out there saying crypto's dead. It ain't dead. Bitcoin does all this. It does this. It does this so many times. I've heard this Bitcoin's dying stuff so many times, guys. Are you still being fooled by it all? Because I've seen, maybe going back 6 times, I've seen bear markets in cryptos. And they always say Bitcoin's dead at the bottom of the bear market every time. And the people that don't buy in later kick themselves and say, oh, I should have bought some back when it was, last time I think it was 3,500, bottomed out, something like that. And the time before that was like 1,800 or something. And the time before that it bottomed out to something like 260, and I think the time, I'm just trying to remember, I think the time before that was like $60, something like that. It was, you go all the way back. It's been doing this over and over and over again, and everybody says, okay, it's dead, it's over, crypto's over, sell all your Bitcoin. At the bottom, they tell you to sell all your Bitcoin because Bitcoin's dead, and you think to yourself, oh, yeah, well, at least something's better than nothing. It's going to die, it's going to become worthless. Okay, I'm selling my Bitcoin right here at the bottom. And then 6 months later, you come along and Bitcoin is up astronomically high, and you're like, why did I do that? Oh, that's where we're going all over again. It's just wash, rinse, repeat. So, what was the last high? 20,000, and then the last high was 68,000. So look at that differential between 20,000 and 68,000, and just figure the next high maybe it'll be what would the differential be? Right, 150, 200,000 this next time around. And you're really going to sell all your Bitcoin for 17,800? But hanging in there, again, is that risk that it could for some reason or another. You just don't know what could happen, what the future holds, and it's risky asset class. It is risky. Taking a look at Dow Jones Industrial Average. See, that's the thing. I don't think silver and gold are risky. Bitcoin, I see that as risky. But that's just me. And that's just my ideas on it. Dow Jones Industrial Average is up 444 points today at 34,450. We're looking at crude oil at $74.58. It's up $1.41 on the day so far. So that's substantially lower the price for crude than when we saw at the peaks of the COVID crisis, when crude was up way over 100. Move index today 141.93. So we're starting to see the move index move a little bit to the upside today. Bonds and rates. We're looking at substantially falling yields today, especially when we get in around the 3-year, 22 basis points. Now the 10-year, we've lost 16 basis points at 3.44, and the US 30-year has lost 10 basis points at 3.47. So we're seeing falling yields today on the yield curve, and we're seeing the dollar falling today too. It's fell 1.25, and that's quite a large fall in the dollar, 1.2% at 103.86 today so far on the US dollar index. It was a little bit of a waterfall earlier today, and it fell from 104.91 down to, it basically fell a point rather quickly there. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. And don't forget to hit that notification icon. Bye bye, guys.